All right, let's get across some detail of this market today. We're with Chris Weston from IG Markets in Melbourne. Chris, it's kind of these markets just sitting and waiting and watching again. We had the big falls yesterday. Why are we not seeing so much action so far in the first hour, in your view?
Well, there's not really a huge reason to be piling into equities today. I mean, I think part of the reason we had we did all right this morning was I think some of the weakness we saw in the Wall Street was largely priced into our markets. I mean, the US futures were down pretty heavily. Some of the Dow futures down about 80 points or so when we went home. So, yeah, despite the pullback that we had in US trade, I think part of it was being priced into our market. Again, you can look at Fortescue. I think this is just such an interesting story now. What's happening with this stock? It's down. Last time I checked, it was down another 4%. Trading around just below that 390 level at the moment. These are the lowest levels now we're seeing since 2010. I think if you look at the iron ore price, it closed last night at $123.6 per tonne. It fell another 1.1%, so that stock's just being leveraged to that at the moment. And I think if you look at the steel index that we see on Bloomberg, that's lowest levels now since I think March 2010. So the steel index generally leads the iron ore price, and perhaps the iron ore price suggests we're going to see some further downside. But if you actually do a chart of the iron ore price over the last 5 or 6 years, there's been really clear support coming around that $117 mark. So perhaps we can have a little bit of a fall, but I'll be largely expecting some of the producers to cut back on supply around that 117 level. That could feed into Fortescue's valuation. But I think downside, you're looking at that sort of 21st of May 2002 low is probably the big limited drop. I think that's down at about $3.28. So we've got a bit of a way to go until we get to those levels. But the stock's down something like 23% or so in the last 13 days, so that's still under a lot of pressure. BHP, that opened up a little bit stronger this morning, but we've seen people sell into that as well. US futures made up a bit of a move in early trade from around 8 o'clock till about just before the pre-market, but they've given back a few gains as well. And we've got the Aussie dollar just sitting just above nice support around that 102.80 level at the moment. But I think people are looking very closely ahead of this fixed income open this morning. So later on, should I say, the European fixed income market. It's never good to see Germany coming out and having its rating, the outlook cut to negative. Now, that puts them on a 3-month review by Moody's, and if they do cut that, then again it sort of feeds into the whole core argument about what's happening in Europe. Is the core now getting affected by the spillover from Spain? So the visibility in terms of earnings is still very low at the moment, and that's why we're just seeing this kind of muted reaction. Volumes are still obviously very low, and it's just a very directionless market until we get some sort of clarity and confidence back in here.
Yeah, it's funny because when we started the session and we all knew we were down 1.7% yesterday, it looked like maybe the bargain hunters had started to come into the market, seeing opportunities there. But as you've just explained, that's already faded into the second hour. At what levels will we start to say, will things start to look just too good and people start buying en masse again? Although, as you point out, it's really hard to find reasons to buy, but at some point it obviously looks too attractive to ignore.
Yeah, well, I'm not a value guy myself. I mean, you're probably better off speaking to Peter Escher about that. But what you do see, Brooke, is when you get the way that the investment banks work is when you get too far away from a price target, that's when you start getting them coming out and upgrading a lot of stocks to buys. I saw JP Morgan a couple of days ago said that the mining space had fallen that far and they've upgraded the space to a neutral capacity. So when you do get these big pullbacks in a lot of these stocks, and different sectors, that's when the people start saying, look, we've actually revised our commodity price targets. That feeds into our valuation. We've looked at the macro, the economic side of things. That feeds into commodity targets and the valuations of these stocks as well. And then you say, right, our price target's where we want it to be. Now, the price of the actual underlying stock is now about 20% or so away from that price target. So therefore, we have to upgrade it. And then that feeds into the sector. And I think once we get things going a bit too far, then clearly we are going to get a lot of these investment banks upgrading stocks to buy recommendations just because they're too far away from their price targets. So we're at risk of getting to that stage now. Earnings have been downgraded across the board going into this earnings season, given what we've seen with confession seizing and obviously the falling macro issues as well. So yeah, I don't know, perhaps below you get down to that sort of 4,000 level again, you get that clear support coming through. But I think at the moment that people aren't really willing to rush in and still You know, you've got this big bidding coming into treasuries across the world, especially the Australian treasury market, which is getting bids across the world now. We're starting a number of people I saw on different channels talking about how attractive Australian bonds are right now, even though they're below 3% on the 10-year relative to other asset classes and relative to other bonds. So that's still probably the place to be in terms of a lot of people's minds.
Chris, anything else that you're looking towards today? I know we've got the HSBC flash PMI, or even towards the end of the week.
Well, I think you've got to look at the European bond market today. We did see a nice pickup in some of the risk assets last night. I think really what we saw was Spain. Spain was down 5.5%, closed down 1.1%. Yeah, they've come out and administered a short sale ban, as has Italy for a week. Spain doing that for on all stocks, whereas Italy have just done it on financials. So clearly the DAX is going to be the index now. If you're looking to short an index, that's going to be the place to go. That will underperform the other markets, and I think in the short term, as people express their bearish euro view through there. We've got the Troika coming into Greece tonight, looking at their budget targets there. We saw Mr. Tsipras coming out last night, pretty much all but given up on the EU IMF plan and just saying it's just been an absolute failure. So I'm going to be looking out for commentary around that. That could throw into spotlight what's happening with the euro, because we did see people looking to buy into that yesterday. Big bullish outside day on euro Aussie. That's going to be looked at quite closely tonight. And again, we're feeding into the CPI print tomorrow, so that's going to be quite an interesting one. Not too much on the earnings side tonight. We've got a load of companies coming out. Probably the key one is going to be Simon Property Group in the US. That's going to be a big read-in for Westfield, because they're very similar sort of business models there. So any Westfield shareholders will be looking at Simon Property Group, the biggest shopping centre owner in the world. So be looking at those closely tonight. But otherwise, it's a pretty low day in terms of what we're seeing. I think Holland are going to come out with a bond auction, and I think Spain come to the market on with an 84-day and a 175-day bill auction. But you've got to keep your eye on the Spanish 2-year right now. That's where they're raising the money in the short end, and we're starting to get to that inverted yield curve. So another spike up tonight, and risk assets will struggle. But I'm trying to look for some positives in this market. But what I've actually seen over the last 2 weeks or so is some of the data around the world actually started improving and actually coming out slightly better than expected, and that's something I'll be keeping my eye out this week. But I think European PMI numbers probably the key there on the economic data side tonight.
Yeah, fantastic. Thanks so much, Chris.
Cheers, Brooke.